It's very difficult when you've got two stocks because you can have two different single stock events. When you broaden your portfolio out of having 15 shorts and 15 longs, you'll end up with less of that risk. One of the ways of getting less of that risk, and you want to isolate the risk in the one stock that you think has got the story, then you can do it versus its sector. The sector, really, thinking about it, is like going short all the other stocks against one. So you get rid of the risk of the earnings announcement from one company. So here on the screen, we've got the top chart is BP against the European energy sector, so the oil and gas sector in Europe. As you can see, tracks it very closely. Again, incredibly misleading because over time it does move. However, recently BP has effectively performed in line with that sector. So if you were to have that spread bet on right now, you're not going to make any money. There's no trend going on. However, if you think that this trend is going to change, that's going to be interesting because you've got a relatively low band of volatility, and let's say you think that now BP is going to outperform for various reasons, that's a really nice trade to have on because clearly having the sector short against it balances out a lot of the risks. Because in a normal market with no particular news in BP, they're doing the same thing. So when you do see the moves, as you see here, BP re-rated itself over that period of time, and it moved from 130 to 140 as a spread. That was a great opportunity. Now it's come back in line again, it's trading around, maybe it'll move again. I don't know, but these are the things we need to look at and understand. And so we can do that versus the sector, and we can look at anything against any sector. Most of these sectors trade in ETF form now, so you can just buy and sell the sector. And that's a really neat way of doing it. We can also then change this, and let's have a look at BP against the market itself. Again, now we're going to be selling 100 shares against buying BP share. So what we're saying is BP is going to do better than the UK market. Now, implicit in that, if you remember, is the fact that the UK market's made up of sectors in itself, of which mining was a big proportion of it, oil and banks and pharmaceuticals. So what you're saying is BP is going to do better than the mining sector. BP is going to do better than... There's a lot of things implicit in that. So it's not a straightforward thing to say it's going to do better than the market. But that's not to say you should be scared of doing these things, because they can be very interesting.